Hello, everyone. No matter where you're tuning in from, good morning, good afternoon, and good evening to you. I'm thrilled to have you here for another exciting session of our weekly price action based technical analysis series focusing on the XAUUSD. First and foremost, let me stress that this video is dedicated to educational purposes. Our main goal here is to provide with valuable insights into the XAU-USD chart and enhance our proficiency in price action analysis. However, I must reiterate that the importance of approaching trading decisions with caution and seeking advice from professionals before making any financial moves. In today's session, we have an interesting lineup. We will closely examine the XAUUSD market structure, employing simple yet powerful setups to uncover potential ideas that could significantly impact our trading choices for the new week. In less than 10 minutes, we will explore the historical price movement of the XAUUSD, utilizing trend lines, key levels, and of course, chart patterns to gain valuable insight into the market's current dynamics. For those who were with us during the previous technical setup on the gold spot, you will recall the phenomenal moment when price action moved over an accumulation of 500 pips in our favor after capitalizing on various buying and selling opportunities throughout the course of last week's trading session. Before we plunge into the technical intricacies of the upcoming week, let's take a moment to reflect on the key moments that influenced our decision during the course of the previous week. Then, talking about last week's trading session, we saw how price action started the week with a chopper situation where price was initially ranging between the 1956 ish and of course the 1951 to give us an insight into the level of indecision at the beginning of the week. And coupled with a trend lines here, we will use the structure here to guide our trading activity for the week. And with our stop orders placed at both ends, we had our first position for the week triggered in the form of a buy position as we saw price broke out both the 1954 and of course the 1956 to have two positions running. We rode that move all the way up as you can see here, added more positions to capitalize on more momentum as price action its TB target of about 300 pips on all the positions we had. So it was more of a profitable start for the week for us on the XAU USD. Then another moment came in right on the 18th of July when I spotted a new setup on the 15 minutes time frame where we were looking forward to either the breakdown of the 1967 or the breakout of the 1972 to capitalize on another momentum. And as you can see, we saw the breakout of the resistance line moving over 110 pips in our favor before we begin to see some bearish momentum begin. So it was more of buying the XAU USD during the first half of last week, and not until the second half began, we begin to see bearish momentum, which we of course took advantage of till the later part of last week's trading session. So it was quite a profitable week for us on this instrument for the previous week. And for those who would like to review this commentaries for educational purposes, you will be seeing the link to this commentary right in the description box of this current video. And if you are watching this from my YouTube channel, you will be seeing the link at the top right hand side of your screen right now. So, with that being said, here, let's dive right into the business for today. And of course, I was able to identify a simple setup that we are going to be using to guide our trading activity for this week. And what I did here was to use my 4 hours time frame. And right here on the 4 hours time frame, what I did was to take into consideration the nature of price action since the beginning of this month of July. And I was able to come up with a couple of parameters here that we are going to be using to guide our trading activity. Now, the first thing I was able to observe on the 4 hours time frame is the fact that price has been bullish since the beginning of this month. And in fact, to emphasize the strength of the buyers here, we have a couple of trend lines after connecting the series of higher lows. And you will see this trend line has been supporting that bullish momentum all the way into that 1987 level, which is the highest point price action has been since the in the last couple of months. Then, in addition to this trend line, is a key level which I was able to spot around the 1960 level. And in fact, this level has been a major determinant of price action for the last couple of months. Now, if we go to, let's go just to, we're not going to go too far. Let's go into the 16th of June. We saw how this level was a very strong selling niche, as you will see here. Then last week's trading session, we saw how this level again remained a selling niche, negating all attempt by the buyers to break out of that structure. But interestingly, last week we saw this phenomenal move breaking out of that key level for the first time to find a new high. Now, the question at this point is, will this serve as a platform for a continued uptrend? As you all know from a technical standpoint, whenever we witness a breakout of a key structure, such as the 1960 level on this current market structure, we expect that at a point in time, price is likely going to come back and retest that structure with the anticipation of an uptrend continuation. And coupled with the fact that price is sitting on the ascending trend line, sharing a beautiful confluence with the 1960 level, you would agree with me that we are at a critical point in the market where anything can happen at this point. So now the question going into the new week is, will price action respect the ascending trend line and of course retest the key level at the 1960 to incite an uptrend continuation? Or are we going to be seeing a situation where both trend lines and the 1960 will be broken to the downside to incite a sell off in this market? So these are the things we are going to be looking at for this week, as our center of focus will remain around the 1960, as depending on how participants in the market react to the structure during the early hours of the week will determine what our next line of action will be. So before I pause this video here, I would also want us to take into consideration the economic event that is coming up next week, as we all know that these fundamental factors often manifest on the chart in technical patterns and, of course, price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns, hereby making us to position ourselves in such a way that we can catch any potential move prior, during, and even after this economic event. So, with that being said, I was able to pull out a couple of high impact events coming in from the US economic docket. And the first high impact event we are going to be witnessing is coming up on Monday, July 24th, and that is the global manufacturing PMI. Then the next one is coming up on Wednesday, which is the major event that majority in the market are looking forward to, and that is the Fed interest rate decision. Then on Friday, we have the core personal consumption expenditure, which of course is going to be on our watch list for the major events to look out for next week. And of course, the anticipation of this event will reflect on the chart as price action. So back into the 4 hours time frame, like I said, our center of focus still remains around this area where I said, depending on what happens here during the early hours of next week will determine what our next line of action will be. Trust me, I will be with you in the comment section as always to give you an update on what I think will happen after monitoring how participants will react to this area during the early hours of the week. If you found the content helpful and useful in making your independent trading decisions for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.